Good morning and welcome. Are you a student eager to dive into the world of cybersecurity and risk management, or an industry expert looking to sharpen your knowledge of vendor risk in today's digital ecosystem, or a curious mind fascinated by how organizations manage trust in a connected world? Then this video is just for you. Join me as we explore the fascinating and the crucial world of third party risk management, or TPRM, where security, trust, and accountability converge in the age of outsourcing, cloud, and digital transformation. This is a part 4 of the series on TPRM. From part 1 to 3, we had covered the context, drivers that makes TPRM a must in a modern cybersecurity world. We then covered the key components of TPRM framework tailored for digital and operational resilience. We looked at the cybersecurity risks commonly posed by third parties, from unauthorized access to supply chain attacks. We reviewed the tools and technologies that empower organizations to assess, monitor, and manage vendors effectively. We tried to understand TPRM in the context of leading security framework like NIST CSF, ISO 27001, COBIT, and more. We then try to understand the best practices that makes TPRM practical, sustainable, and audit ready. We did a deep dive into the top laws, regulations, guidelines, and framework that governs TPRM in the BFSI sectors like DORA, RBI, GDPR, CERT-In, etc. We will now continue this journey and we'll try to break down and demystify the key remaining pillars of TPRM, which includes an analytical comparison of TPRM expectations across global standards from FFIEC or to COSO and few others. And finally, we'll wrap up with a conclusion that ties everything together, showing how TPRM strengthens trust, compliance, and business resilience. Whether you are learning, building, advising, or managing risk, this video will give you clarity, structure, and insight you need to understand TPRM from the grounds up. So hit the play button, like and subscribe, and let's dive into the world of third party risk management, where every connection counts and every risk can be managed. Let's get started. This is your host, Savit Vittal Salian. Namaskar. Let's now look at key cybersecurity and risk management framework. We'll also try to do a deep dive to some extent, at least take the top 5 of the requirements in few of them. From a framework perspective, if you look at and its component, the NIST Cybersecurity Framework, it helps us to go deeper and understand from a supply chain risk management perspective, specifically the category under identify function. Students or experts can pull in the NIST Cybersecurity Framework and can look at this specific section to get insight as to what is the direction that we are getting from this NIST CSF. From an ISO 27001, it helps us gives a perspective which includes controls on supplier relationship, how outsourcing should be done, and what access should be provided to the vendor. So it has been beautifully articulated in ISO 27001, 27036, and so on. You can take that as a reference and you can build on it. From a Basel 3 and 4 perspective, it is recognizes third party risk as part of operational risk, requiring banks to identify and manage it. So, the directions can be taken from Basel 3 when it comes to how to identify third party risk and how to link it with your operational risk. From a COBIT perspective, it emphasizes third party governance and IT risk management across control domains. It's a very detailed listing, covers almost every aspects of it. You can pick those which works for you or relevant to your space. COBIT is a very big granular direction being provided. From an FFIEC perspective, it provides extensive direction on vendor risk management in banking sector. This should be useful. It provides us a clear insight. From a COSO ERM framework perspective, it focuses on enterprise risk management, including third party risk as part of strategy and operational objective. So that goes at a higher level. So this might help you with your articulation on your risk from a management perspective. If you go into details of few of them, so from a NIST Cybersecurity Framework perspective, the focus is cybersecurity risk management, including supply chain risk. That's the focus. In this, we have the inventory, the vendor inventory. It states about maintaining a list of suppliers and third party partners. Next is risk assessment, which is about assess suppliers and third party risk before onboarding. From a contractual obligation perspective, it includes cybersecurity requirements in vendor agreements. From a continuous monitoring perspective, it states continuously monitor supplier activities and risks. From a response coordination perspective, it helps provide direction on how to coordinate response plans with third parties for cybersecurity events. It gives you the top 5 requirements. There are more, but these are the top 5 which can help you set your directions. So when you're touching NIST from a TPRM perspective, you can look at these 5 aspects. Get a clue on how things can be done in this space. You can pick the 5 items from here. You can pick all others also, whichever relevant, but these 5 are generally which helps you build your initial space. When we look at ISO 27001, the focus here is information security management system and its controls. From an information security policy for supplier relation, it defines helps define a policy for managing vendor risk. From a supplier risk assessment perspective, assesses third party access and impact on confidentiality, integrity, and availability. From a contractual clause perspective, it includes security obligations in vendor contracts. It gives you some clear instructions or directions on how to include that. How to include your security obligations into the contract. From a performance monitoring perspective, it helps monitor and review supplier services regularly. It defines it and you can take a reference from ISO 27001. Managing change to vendor services. It controls and assesses risk during change to vendor services. This is when you want to exit the vendor. So ISO 27001 helps you define and articulate how that's going to be. You're taking the best out of each. From a ISO 27036 perspective, the focus here is information security in supplier relationship. From a supplier lifecycle security perspective, it helps implement security control throughout supplier selection, their onboarding, their operations, and offboarding. When you want to define security controls, you come to ISO 27036 on the full life cycle. It gives you some clear instructions on how to go about it. From a risk-based approach, it helps classify supplier based on their criticality and information access. We discussed this earlier, and that details can come from 27,036. From a supplier agreement content perspective, it helps ensure agreements including clear roles, responsibilities, and risk controls. So that also comes from 27,036. You can take a reference and you can build on it. From an information sharing controls perspective, it helps protect shared information across organizational boundaries. From a joint incident response perspective, it helps establish shared incident handling procedures with suppliers. So, this specifically from an incident management perspective. So, your incident management team can take a reference from 27,036 on how the procedures and the process will work between you as an organization and your vendor. From a Basel 3 and 4 perspective, where the focus is capital adequacy and risk management in banking, the top 5 include outsourcing risk as operational risk, wherein it treats vendor related failure as part of operational risk. The next is governance and accountability. Bank retain full accountability for outsourced activity. So you are the primary accountable party, no matter what role your vendor is playing, what you have asked the vendor to play. Maybe they are managing 99% of it, but you are still accountable for it. That definition comes from, or that direction comes from your Basel 3, Basel 4. Due diligence process. It helps evaluate vendor risk before engagement, before you onboard. Contractual clarity. It includes SLAs, audit rights, compliance clause in the contract. So if you want to enrich your contracts, you come to Basel 3, Basel 4 for references. That's where it will help you get directions on how to implement it, how to articulate it or embed it into the contract. From a risk controls and monitoring perspective, it helps implement internal controls to continuously monitor vendor performance and risk. So again, Basel 3 helps you with that. From a COBIT perspective, the focus here is IT governance and management framework. First one is identify and categorize suppliers, which means it helps classify vendors by business criticality and their risk. It helps evaluate and select suppliers by conducting assessment before engaging the vendor. It helps manage supplier relationship by establishing clear roles and processes for vendor oversight. It helps in contract management, maintain and manage agreements with measurable performance terms. So when you want to measure a performance of a vendor, you come to COBIT and it gives you directions of how these can be done or implemented. Monitor performance and confirmation perspective. It helps track vendors KPI, compliance and audit results. So if you look at COBIT, it helps you to measure, track specifics. There are less interpretation, more data, more numbers, facts, figures. So you can come to COBIT for getting that type of insight, which helps you manage your vendor better. So you come to COBIT, look at it, pull the relevant one, and then you can add it into your governance. From a FFIEC guidelines perspective, the focus here is vendor management for financial institutions. The top 5 is risk assessment prior to engagement, which evaluate risk before entering into third-party relationship. Well, this theme is coming over and over in different guidelines. So you can take all of these, look at it and articulate the way you want to do it. But there are enough directions provided by these guidelines. You can't, it's very rare that you go wrong if you reference all of these. when you are drafting it. From an ongoing monitoring and oversight perspective, it helps define how regularly assess the performance and security of third-party providers. From a due diligence perspective, it helps conduct thorough reviews of vendors' financials, operational, and security capability. Do note, this is a place where you can do your vendor financial reviews. So, how to go about with it is something which you can look at FFIEC for directions. This will help you with that. From a contract structuring perspective, it helps ensure agreements covers responsibilities, SLAs, data handling, and exit plans. So that's how you want to structure your contract. From a board and management responsibility perspective, it helps ensure executive level accountability and reporting. So this gives you that direction. You can take that from FFIEC. From a COSO ERM framework perspective, the focus here is ERM across the organization. The first is risk identification and prioritization. It helps identify and assess third-party risk as part of enterprise risk planning. From a risk appetite alignment perspective, it aligns third-party risk with the organization's risk tolerance and strategy. So you come to COSO for reference when you want to align the third-party risk with your organization's risk. It gives you very clear direction as to how to go about with it. From a control activity perspective, it is integrate vendor-related controls into operational process. From information and communication perspective, it helps maintain transparent communication channel between third parties. From monitoring and improvement perspective, it's about continuously evaluating the effectiveness of TPRM process and adjust as needed. In summary, NIST top themes: inventory, risk assessment, monitoring, contracts, incident response coordination. ISO 27001, supplier policies, assessment, contracts, monitoring, service change control. ISO 27036, it's about lifecycle security, agreement terms, incident coordination, and classification. Basel 3.4, it's about operational risk classification, controls, oversight, governance, contracts. From COBIT, it's about supplier classification, selection, performance, and contract management. From FFIEC perspective, it's about due diligence, risk assessment, oversight, executive accountability, and contracts. From COSO, it's about risk alignment with strategy, governance, monitoring, controls, and reporting. For the students and experts in watching this video, you can pause the screen, take a screenshot, and then look at your process if you have, and check against these lists. If you think certain aspects of the themes are weak or missing, or you think it need to be strengthened, look at this screen and check out which framework you can go for directions. Example, when it is about governance or when it is about executive accountability, the best one which can help you with that is FFIEC. If it is about reporting, you can reference COSO. If it is about risk classification, in that case, for operational risk classification, you can go for Basel 3, Basel 4. If it is about incident coordination or incident response, you can go for NIST, you can go for ISO 27036. So this is how you take the best of the framework, best from each of the framework to enrich your own process. So all of these have their strengths. So when you are building your own TPRM framework, you can use all of these, pick the ones which makes sense for your business, take the best out of each and build your structure. From a summary perspective, under law, you have examples from GDPR, GLBA, DPDP Act, etc. Covers data protection, accountability for vendor data misuse. From a regulation perspective, you have DORA, RBI's, IRDA, EBA guidelines, which covers your risk controls, contracts, reporting, and audit rights. When it's about guidelines, you have RBI's outsourcing guidelines, CERT-In guidelines, IRDA outsourcing guidelines, which covers you with cybersecurity, due diligence, contingency, subcontractor monitoring. When it's about framework, which is NIST CSF, ISO 27001, Basel 3, COBIT, etc., it helps you cover the control maturity, IT governance, operational risk, third party access. Let's now compare TPRM across leading frameworks and standards. So we look at NIST, ISO 27001, ISO 27036, Basel 3.4, COBIT 2019, FFIEC guidelines, and COSO from a framework and standard. But these are the areas that we will try to go a little deeper. There are 7. If we look at from a core focus areas of these, NIST focus area is cybersecurity. ISO 27001 is ISMS and controls. 27036 it's about supplier relationship. Basel 3.4 is banking, capital, and operational risk. COBIT it's about IT governance. From FFIEC guidelines perspective, it is about financial IT supervision. COSO it's about enterprise risk management. The approach for NIST will be risk based, lifecycle driven. The strength in TPRM, it defines third party cyber risk explicitly via the supply chain risk management category, emphasizes on inventory monitoring and incident coordination. The best use case in this from NIST perspective will be ideal for BFSI firms seeking strong cybersecurity posture with clear third-party integration. When we look at ISO 27001, the approach is control-based, certification-friendly. The best use case in this from ISO 27001 is best for organization seeking international certification and basic vendor controls. The strength is to include clauses on supplier relationship management, offers baseline security expectations for vendor. When we look at 27036, the approach is deep vendor lifecycle management. It is suitable for large BFSI firms heavily reliant on outsourcing of IT vendors. Do note, for large BFSI firms. In this, the strength is dedicated standards for supplier relationship, covers security in acquisition, maintenance, and offboarding. Strong focus on contracts and shared responsibilities. So if you pause here, you can see ISO 27036 gives you quite a lot grip on this relationship in this space. Do dive deeper on this. From a Basel 3 and 4 perspective, it is about risk quantification and governance led. That's the approach. Best use case, ideal for banks focusing on capital adequacy, operational loss prevention, and regulatory compliance. Its strength is positions third party failure as operational risk, requires governance, due diligence, and continuity planning. If that's a space that you want to focus on, you can go to Basel 3, Basel 4. From a COBIT perspective, it's more of process centric and governance aligned, well suited for IT intensive BFSI firms seeking enterprise governance alignment. It helps integrate third party management across governance, performance, and risk objectives. It helps promote lifecycle oversight, contract management, and performance tracking. From an FFIEC perspective, it's more of regulatory and detailed. The best use case, it's most relevant for US regulated financial institutions requiring regulatory audit readiness. Very specific, very focused. So if your business or part of your business fits into this is the place where you can go and take references from to build your structure. It provides highly perspective TPRM expectations, including board oversight, detailed due diligence, monitoring, and contractual controls. From a COSO perspective, it's excellent for BFSI firms integrating vendor risk into enterprise-wide risk. That's the best use case. It's very strategic and top-down approach. The strength is it treats third-party risk as a strategic, operational, or compliance risk. It emphasizes integration with risk appetite, culture, and reporting. You can take a pause here, get the screenshot, and then go and check your own processes against these and see which are the areas which requires fine tuning. And if there are areas which requires addition, you can take this as a reference and you can go to individual framework and get those ideas. Key differences at a glance. Let's look at it. From a TPRM specificity perspective, you have NIST at a high, moderate, and so on. But what does it mean? Let's look at it. Focus. When it is about cybersecurity, it's NIST. When it is information security controls, it's 27,000. When it is supplier security, it is 27,036. When it is operational risk, you take reference Basel 3-4. When it is about IT governance, you go for COBIT. When it is about regulatory risk, you take FFIEC. When it is about strategic risk, you go with COSO. Specific areas or different areas that you can reference to. The phases which TPRM covers: NIST, full life cycle; ISO, risk and contracts; ISO 27036, full life cycle; Basel 3, governance and monitoring; COBIT, selection to monitoring; FFIEC, similar to NIST and ISO, all phases; COSO, risk strategy; incident handling with vendors, NIST required, some are implied, some are defined, you can have that; audit oversight, NIST required, ISO required, Basel 3 required, and so on. This should give you some idea about how to navigate it, how to differentiate it, and where to focus. So you can use NIST if you want cyber security focused TPRM with structured risk categories, especially for ICT vendors. Use ISO 27001 for general compliance and structured control with optional vendor clauses. Use ISO 27036 when managing complex or high risk vendor ecosystem, especially across the full life cycle. Use Basel 3 to treat vendor failures as operational risk that impacts capital and governance reporting. Use COBIT 2019 if aligning TPRM with IT governance, enterprise process, and performance metrics. Use FFIEC if your organization is US financial entity needing comprehensive regulatory ready TPRM. Use COSO ERM when incorporating third party risk into enterprise wide risk strategy and decision making. Hence, in conclusion, in the interconnected digital age, no organization can insulate itself from the risk posed by third parties. A weak link in the vendor chain can undermine even the most robust internal security posture. Therefore, implementing a strategic risk based third party risk management program is not just a cyber security imperative but a business necessity. As cyber threat evolves and regulatory scrutiny increases, organizations that proactively manage third party risk will not only protect their data and operations but also build trust with their customers, regulators, and partners. Ultimately, TPRM is not a one time project but a continuous process of vigilance, validation, and value alignment in a dynamic ecosystem. In summary, we have now completed the primary objective of this course series video. We have looked at the context, the drivers, its key components, cybersecurity risks commonly posed by third parties, tools and technologies, TPRM in the context of cybersecurity framework, best practices. We looked at top laws, regulations, guidelines, and frameworks for TPRM in the BFSI sector. We looked at key cybersecurity and risk management framework. We did a comparative analysis of the TPRM across leading frameworks and strategies and closed off with the conclusion. This ends the 4-part series now. I would like to take this opportunity to thank you for investing the time and the effort that you have taken during this journey. I hope you found this useful. Do share with your colleagues and friends who might be interested in this topic, either a student who wants to understand the space or an expert who is trying to enhance the current structure that you have. Like and subscribe. See you in the next video. Thanking you. Namaskar.